Thank you very much. Good morning. Thanks a lot, Greg, for setting the stage. Over the next couple of minutes, I'll give you a very quick overview of what's happening in the financial markets, and I'll actually try to bring a little more positive news to what Greg just said, and give you an overview of our international business and what's happening actually between the exchange and the Americas. So, as you know, we're living through some very interesting times with volatile equity markets, fluctuating commodity prices, a very quiet IPO market, and an extended economic recession. And even though we're doing fairly well in Canada, as pointed by Greg, relatively speaking, and thanks to our banking sector and a bit of luck, we're certainly feeling the pain of significant global economic slowdown, as shown by the GDP numbers released by the Bank of Canada yesterday, announcing a contraction for the first quarter of 7.3% on an annualized basis. Mr. Carney reiterated again yesterday that the economy won't come back until credit starts flowing again. And credit will start flowing when consumer confidence comes back. So the obvious question is, when will consumer confidence return? And the answer, as pointed by Greg, is a lot of it is around psychology, but ultimately when the consumer feels that we've hit bottom. And notwithstanding all the doom and gloom that we hear day after day, there are some encouraging signs out there. Let me point to a few. Commodity prices seem to have hit bottom, with many base metals coming back from their lows. The TED spread, as pointed by Greg earlier, which measures the spread between treasuries and LIBOR, continues to tighten. The Baltic Index, which measures the level of international flow of goods, have been increasing for the past 5 weeks. The US housing and car sales seems to be bottoming out. Some business in the US are seeing some firming up in their volumes. And lastly, but not least, the financial markets are coming back to life. The capital markets are said to be a leading indicator of economic recovery. So if I can bring a bit of encouraging news to this lovely morning, let me give you a few stats on our market. The year-over-year return of the S&P TSX Composite from March 08 to March 09 continues to be negative. Obviously, we're looking at the minus 32% return. However, since January of this year, as of last night, the index is up year-to-date 2%. And since March 9th, which is this year's low, the index is actually up 24%, closing last night at 9,400. On the exchange side, in terms of financing activity for the first 3 months of 09, we've experienced a 34% increase in dollars raised on our markets compared to the same period last year, with almost $12 billion raised. Most of the activity is coming from currently listed TSX companies raising money in the secondary market, mainly from mining, energy, and the financial sectors. This being said, the IPO market continues to be very, very quiet, both in Canada and around the globe. But notwithstanding the ongoing global economic challenges, we continue in Toronto Stock Exchange to deploy our international business development strategy of educating and creating awareness about the Canadian capital markets. We go in selected geographic area where we feel we can leverage our competitive advantage around mining, where we have 60% of all the world's listed companies on our two exchange. And last year, we completed 80% of all financing transactions in the mining sectors around the world. In energy, oil and gas, where we have close to 50% of all the listed companies on our exchanges. In technology and clean tech, where we have the second largest number of issuers in North America after NASDAQ. And our capacity to provide capital to small and medium enterprise, something that we've been doing for over 150 years. In terms of our international business, we have 270 issuers listed on our two markets, of which approximately 50% come from the US, and the balance coming from Europe, China, Australia, South Africa, and obviously the Americas, Latin and South America. So why are these companies coming to our markets? Well, first of all, because we have the critical mass in the sectors I just mentioned before, which means that we have the full support infrastructure in place with the expertise in these sectors. So we have the bankers, the lawyers, the engineers, the research analysts, and other professionals to support the issuers. We have the investor base, both retail and institutional, which knows and is comfortable with these sectors, but also comfortable with investing in the smaller companies. And I mean companies having market caps below 500 million, companies where at that level, if listed on New York or NASDAQ, would be running the risk of becoming orphans. And thirdly, on a daily basis, an average of 40% of our trading volume is actually executed by non-Canadian brokers. So when we travel in international markets, we can truly say that we can provide North American liquidity, not just Canadian liquidity. And it's important that all of our international efforts are deployed in partnership with members of the Toronto business community, bankers, lawyers, accountants, engineers, and other service providers with their respective expertise. We're seeing the results as we got a record 49 international issuers in 2008, which was the same number than 2007, and that despite very challenging market environment. I must also mention the Canadian embassies that have been very helpful in coordinating our various initiatives and making introductions to the right people, governments and business people. There's a long history between Toronto and the Americas, and today our relationships are both northbound and southbound. Historically, Canadian investors would purchase directly resource assets in Latin America. This is demonstrated by the 300 listed mining companies that have operations in 11 countries across Latin America. The most active markets are Mexico, Chile, Peru, Brazil, Argentina, where those companies currently have over 1,000 active mining projects. An emerging trend we're seeing now in Latin America is Latin American management teams keeping ownership of the assets and accessing the North American capital markets directly themselves. A good example is a Peruvian exploration company called Alturas Minerals that is interlisted on TSX and the Lima Stock Exchange. It's still early days as we currently only have 5 Latin American companies listed on our exchange, but the pipeline of prospect is growing nicely, and we know that we'll ramp up when the market turns around. Initiatives have also been taken to facilitate cross-border trading. Last year, a direct link between the clearing, depository, and settlement agencies of Peru and Canada were established to facilitate the flow of securities between the borders. So investors in Peru can now trade securities between the Lima Stock Exchange and TSX easier today. This initiative also should encourage dual listings between our markets, and that could translate to more business between our respective markets. Last year, we went on several business development trips to Mexico, Peru, Chile, and Argentina to build relationships, host seminars, and prospect new companies to be financed on our market. We're truly committed to the development of the Americas, and we continue to work with professionals within the Toronto community on different initiatives in close partnerships with Latin America professionals. And as a marketplace, we know we've got a lot to offer to the Americas, and we're actually confident that we'll be able to support the growth of the Americas when conditions improve. Thank you very much.